We have done videos on REITs from time to time. Reason being, you the viewers love the videos, and also I love REITs. I allocate roughly 20% of my entire portfolio dedicated strictly to REITs. REITs are a unique way to add real estate exposure to your investing portfolio, and they tend to pay high dividend yields. And in today's video, we are going to look at some of my favorite REITs that I consider must-own real estate investment trusts. All three of these REITs have strong management teams, strong portfolios, strong tenants, great balance sheets, and great dividends. If you're excited for this video, then do me a huge favor. Click that like button down below, subscribe to the channel, and let's jump into the video. Hey everyone, Mark Rusin, CPA here, back for another video. As always, everything shared in this video is for educational and informational purposes only. Now in today's video, we are going to look at 3 must-own REITs. Now I consider these REITs must-own, but again, you have to do your own due diligence, and hopefully this video helps with that. But before we begin, here's a quick word from today's sponsor. Today's video is sponsored by Seeking Alpha. Seeking Alpha is a great platform with many tools and great articles covering hundreds, if not thousands, of different companies on the market today. I've actually written for Seeking Alpha for nearly a decade now. And I use Seeking Alpha for a lot of my research. In fact, you will see a lot of their platform in today's video alone. As part of our partnership, Seeking Alpha is offering us a great deal right now. You can sign up for Seeking Alpha Premium, which is regularly $239 a year. Right now they're giving us an exclusive offer for only $99 a year. This includes things like powerful screeners, portfolio trackers, top stock ideas, expert analysis, breaking news, and just ways to get educated. There'll be unique webinars or podcasts that you could see. For just $99 a year, you yourself can get Seeking Alpha Premium. And the best part is, you get a free 7-day trial just to try it out. So sign up using the link down in the description below. With that being said, let's jump into today's video with our first must-own REIT, which is American Tower, stock ticker AMT. American Tower is the premier cell tower REIT on the market today. The company has a market cap of $98 billion, nearly double that of its closest competitor, Crown Castle. Over the past 12 months, shares of American Tower have fallen 8%, as you can see here on the screen, which is using Seeking Alpha. Over the past decade, shares of American Tower have gained 182%, which has outdone the S&P 500, which has gained 168% over the same period. American Tower has a portfolio that consists of 223,000 communication sites across the globe. Most likely you have driven by and seen a cell tower before, potentially one owned by American Tower. These cell towers cost a certain amount to build, but the great thing is they can hold 1, 2, or even 3 tenants. Obviously, the cost is largely the same regardless, but the more tenants, the greater the margin. Looking here at this chart, you can see how the ROI, or return on investment, increases based on the number of tenants alone. They go from 3% for a single tenant up to 24%. And gross margins double from 40% for a single tenant up to 80% for 3-tenant towers. 5G continues to roll out globally, and with 5G, especially for their fastest bands, data is unable to travel as far, which means there is a higher need for more cell towers, which benefits a company like American Tower. The growth in new mobile devices may have slowed slightly recently, but the usage and dependency for data on these mobile devices has only continued to grow. Over the next handful of years, including 2022, US mobile data traffic is expected to grow at a combined annual growth rate of 23%. Company revenues have grown at a 14.2% CAGR, which has coincided with a 14.1% CAGR for adjusted EBITDA, which helps fund a safe, growing dividend. Speaking of a dividend, American Tower currently pays an annual dividend of $6.24 per share, which equates to a dividend yield of 3%. The dividend is well covered with a low payout ratio of 54% using FFO, providing plenty of room for continued dividend growth. Over the past 5 years, the company has increased their dividend at an average annual rate of nearly 18%, making them a rare dividend growth REIT. American Tower is a blue chip REIT, a dominant industry leader in a sector that will continue to grow, making them a must-own REIT. Shares of American Tower currently trade at a forward price to AFFO of 20.7 times, which is well below their 5-year average of 25.6 times. Must-own REIT number 2 is Vici Properties, stock ticker VICI. Vici Properties is somewhat newer to the public markets, but they are growing at a fast pace and becoming a dominant force within their sector. Vici is a hospitality and gaming REIT with a market cap of $35 billion. Vici Properties is the largest landlord on the Las Vegas Strip. Here's a look at some of their properties. They have Caesars Palace, Excalibur, Luxor, Mandalay Bay, MGM Grand, New York, Park MGM, the Mirage, as well as the Venetian. And here's a look at the company timeline and how fast this company has been growing over the years. In 2017, the company had adjusted EBITDA of $690 million. And as of 2022, on an annualized basis, they have adjusted EBITDA over $2.5 billion. Some of the more recent acquisitions have been the Venetian and MGM Grand. Not only does the company own some of the best casino assets in the US, but they also work with some of the best casino operators around. The strength of their assets and operators showed during the midst of the pandemic when they continued to have a 100% collection rate, something they still have to this day. A lot of the company leases are within master lease agreements covering numerous properties, and 76% of the company's rent roll is from S&P 500 tenants. A great thing about REITs is many of them have built-in rent escalators. Some are fixed, some are tied to CPI, making these REITs great hedges against inflation. By the year 2035, Vici is expected to have 96% of their company's rent roll tied to CPI alone. The strong portfolio has been printing cash, which has allowed the company to increase their dividend at a fast rate. Since going public in 2018, the company has increased their dividend by over 35%. The current dividend yield for shares of Vici is 4.6%, so you're getting a solid yield here. And as you can see, the company has increased their dividend each and every year since going public. In terms of valuation, shares of this blue chip REIT, growing at a fast rate, trades at 16 times next year's AFFO. And since going public, they have traded closer to 16.5 times, making the stock slightly undervalued, but pretty fairly valued at current levels. But nonetheless, a great and fast-growing REIT. Must-own REIT number 3 is Avalon Bay Communities, stock ticker AVB. Avalon Bay is one of the 2 largest apartment REITs on the market today. The company has a market cap of $25 billion. Of the 3 REITs that we're looking at today, Avalon Bay happens to be the only one that has since reported their full year 2022 earnings prior to this video going live. And here is a quick look at those results. As you can see, on a full year basis, the company's core FFO increased by 18.5%. The company saw same-store rental revenue increase by nearly 11%. And as you can see, development activity continued through Q4. The company continues to make some positive changes, many of which have paid great dividends in 2022. They continue to deploy their Avalon Connect program, which is a bulk internet smart home technology offering. They also expanded their on-demand furnished housing program. And lastly, they continue to digitize and automate, creating more efficiencies. All of these things created $11 million of incremental NOI in 2022, with meaningful contributions expected to be around the same in the year 2023. Speaking of 2023, management is looking for core FFO growth of 5.3% and same-store revenue growth of 5%, with NOI growth of 4.25% in 2023. Development activity is expected to be even greater this year. Avalon Bay has a great portfolio of properties that are in high demand and continuing to grow rental rates. Continuing to digitize will just further push demand higher, especially for younger generations. In terms of the dividend, AvalonBay currently pays a $6.60 per share dividend, which equates to a dividend yield of 3.7%, with a low payout ratio making it well covered and plenty safe. Although the dividend is plenty safe, the REIT lacks when it comes to dividend growth. As we saw with both American Tower and VICI's, they are both growing their dividend at a strong clip. That is not the case with AvalonBay, and one of the few downsides I see to this REIT. Speaking of valuation, shares of AvalonBay currently trade at a forward price to AFFO of 18.8 times, which is well below their 5-year average of 21.5 times, making this a great time to take a second look at this blue chip apartment leader that continues to expand and continues to grow. All three of these REITs that we looked at today are all of the highest quality. I consider them must own. They have great management teams, great balance sheets, and very strong portfolios that continue to expand and continue to grow. Down in the comments section below, let me know what you think of these three REITs and if you own any of these three REITs. And if you haven't done so yet, make sure you hit that like button down below and definitely check out our special promotion being put on by Seeking Alpha. With that being said, I hope you enjoyed today's video, and we will see you in the next one. Take care.